right, recording's live. I'm not muted this time. Thank God. All right, thank you, dude. I appreciate it. Let me know that you can hear me, smell me, see me, all that good stuff. So today we're going to be looking at GES, which is GES. If you're a fan of the genes, you're probably not a fan of the stock. So we're going to look at that, and we're going to look at Mr. SLP here as well. So hopefully you guys can see this. I doubt there's going to be much action on either one of these today. So we can always use this opportunity for educational stuff. Oh, also, let me just put this on my... Sorry, guys, I got to just put it on my Twitter. All right. All right. And I'm just going to keep these up in the background. I have this on my other monitor here just so we can all see. Sorry, I have so many things to click on. So many clicks. All right, so obviously we're looking at the 1 minute time from here. Nothing is happening right now. These are very low activity stocks, and that's okay. Oh, what is going on my phone now? Jeez, all the devices are going off right now. But if we look at the weekly time frame, we can see that both of these are trash. I don't like SLP, and I don't like GES. I do like Mr. SLP, Mr. Stock Lock Profits, but I don't like GES. The only time I do like this really is just for volatility, which is just pure speculation. So at this point, this is not a company I'd choose to invest in. And when you're speculating, like this is the weekly time frame, there's so much chop here. Like every other candle is bullish and every other candle is bearish, except for like some instances where you get some in the same row in a sequence here, like two of these. That's very difficult to trade. And when you see stuff like this, right? Let me just bring this back up here to this, right? So a lot of people kind of crap on this this particular chart type. But once you know how to use it, it's kind of powerful. So this is going to be the baseline. And all I'm going to do for this is I'm just going to switch back over to candles here really quick. And I'm going to find a value that I like. And I see one right here, maybe a little higher. All right, doesn't have to be a specific penny. But you can see that this level's been reacted to multiple times historically. And it's led to some pretty decent moves off the level. There's a lot of aggression here, right? It was a support there, kind of blasted through resistance, and then just boom, blasted through it. So we're kind of back around that range, okay? So that tells me that on the higher time frame, there's potential, but it might take forever, right? So this is an earnings stream. We're going to be looking at the reaction to the earnings. So we kind of got to take it for what it is, right? So if we look at this guy, yes, we do have, kind of a trend line here, right? This doesn't really mean much because there's no volume on this thing. But we can always look for a break, and maybe that'll get some attention, and maybe the algos will kick up, and maybe, right? There's always a maybe. So in this instance, without that volume, this probably isn't going to go anywhere, right? We had a decent little pop into close, but it was still 750,000 volume on the hourly time frame, so it wasn't anything spectacular. And then if I look at SLP here, you can see we got a little bit of activity here, but it's still, this one as well, it's just garbage volume, right? So if we look at the float, we got a 16.5 million free float, 20 million outstanding shares. So there's, 3.5 million restricted shares. So even if they do run, they might drop an offering at some point. Not a huge risk there, but, it depends on how bad they need the money. And if you look at their chart overall, it's not good, right? So again, we're around kind of a key area here. And in most instances, when you get a situation like this where you've got a high time frame confluence with an earnings or volume catalyst like this, the stock should be blasting because a lot of people should be looking at it, but there's just nothing here. The companies are garbage. There's just nothing to look at. However, we also have the tops list, and we can just look at other stuff, right? So PTIX, I traded that this morning. Pretty clean, pretty easy setup here. And let me just kick back over to the Discord and catch up on the chat before I get into all this. SKZ swings. Can you check my DMs? Me? Yeah, let me take a look. Yeah, I don't typically look at my... I'm sorry, I look at them, but I don't typically see DMs. Discord likes to hate me, and it just doesn't show a bunch of stuff. I don't know if it's like a spam feature or what, but they just omit a bunch of my DMs. And it's not just new message requests. Sometimes I'll have a conversation with someone, it'll just disappear. Break a structure. Yeah. Okay, absolutely. Great topic. Good call. Pookie is spam. Yeah, so, again, as far as GES and SLP goes, if it was going to blast, it would have done it right at close. You know, so I'll keep peeking back at these, but we're probably not going to get a whole lot today. And this spread is 88 cents apart, you know, so now it's 50 cents apart. You know, that's not something that you can effectively trade and get high liquidity fills and things like that. So it's just kind of a garbage stock. So I'm just going to kick this over here to after hours, and you can see we've got some ENTO, another biotech that it pops every now and then, but it's a garbage company overall. Sorry if the CEO is watching this stream. But that doesn't mean that we can't use it to our advantage. So right here, right, that signal right there, that tells me that's an entry opportunity. I'm not actually going to trade this on this account. I'm already done for the day. Oops, we want to go for a long position. But if you're in the lifetime, you already know what's happening here. So we're going to use this, and we're going to look for a 1 to 3 take profit. And it moved over on me. I'll leave it up here, right? So just for the purpose of data collection and not for blind copy trading, please don't just randomly copy someone else's trades, whether it's me or anybody else. I'm just showing you guys a concept. You know, it's not so much about the entry, and it's not so much about where you place your stop loss and all that. It's the ratio of your risk to reward and your position sizing. What's up, Duco? Why are you crying? No, this is Johnson's no-tier earnings live stream, sir. Nobody should be crying except me, okay? It's my birthday. I'll cry if I want to. Cry if I want to. SKZ, I'll do it right now. So this is kind of what I'm talking about, right? So when you talk about break of structure, okay, there's a couple different versions of that are floating around the internet, and it's all ultimately just saying the same stuff. All you're doing is waiting for the price to do something different than the pattern that it's currently showing, right? So if, for example, I were to look, I'm just going to erase this line here. If I were to look at these 4 candles right here, hang on just a moment, guys. I'll be right back. Okay, sorry about that. I'm back. Duke, are you going to bed? Don't cry. No cry, no sleep. You got to stay awake and cry. Keep your parents awake. All right. So if I look at these 4 candles, just these 4, right? Those 4 right there at the edge. You know, this one and then these 3 red ones. I have a pivot, right? So if we look at this and say, okay, here's the top of the pivot and kind of here's the bottom of a pivot roughly, or somewhere around here, right? Somewhere down here. Technically it's down here. So let's just use this range. Okay, this is a structure. Think of this like a floor of a house. Okay, you've got a ceiling and you've got a floor. Okay, and then what happens is you've got this disruption to the ceiling, right? Something pokes through it. This is a break of structure. Okay, so if you're in, let's say this is a coffin, right? You're going to punch the hole in the top to get out. This is essentially what's happening, and then sometimes you can get out, or sometimes the dirt is just too much, it weighs too much, and it pushes it back down, and then the coffin fills with dirt, and then you just die twice, right? So learn your lesson, stay put. So there's break of structure, and then there's break of trend, okay? So trend is a series of highs, higher highs and higher lows, okay? So if I were to just draw this out, let me just come over here. I'll try to keep this kind of in view here, but so this is effectively what we'd like to refer to as an uptrend, okay? This is a series of higher highs and higher lows, and then a downtrend obviously is lower lows and lower highs, so it's just flip that upside down, okay? So when we're looking at a trend, we've got a series of structural components, okay? We've got a high here, we've got a low here, we've got a high here. It's gonna be a little hard to draw these without the lines that I usually use, right? And then this hasn't validated yet, so we can't really call that a support. Okay, but we've got these 5 different points so far. So all I have to do is look and see where these lines intersect with the structure, right? So this line right here, when this breaks, that's a break of structure. This is a break of structure. This is waiting to be broken. It's not a break of structure yet. If this line were to come down here, that would be a break of structure to the downside. This would be a break of structure to the downside. But it's not a change of trend until we start to see it's going to be a little hard to do that because this is like trying to snap around. So let me just move this over here. All right. And actually, you know what? I'm going to push this down here. Be a little more reasonable. So what we have here, right? We've got higher high, assumedly higher high, higher low, right? So this is an uptrend. and then we get a lower low followed by a lower high. So as soon as this lower high hits, that becomes a change of trend. So we're going from an uptrend into a downtrend. This confirms it once this pivot validates, and we like to use 5 candles to do that. So 2 candles on either side of a high or 2 candles on either side of a low need to not challenge that high or low in order for it to be a validated pivot. Okay. Obviously, this would have stopped out. It's just a very, very tight stop, right? That's the whole point here, is not predicting. It's not trying to be right all the time. It's just having super tight stops and then letting things breathe more than we let them breathe to the downside, right? So in this case, structure is a part of trend, okay? And you're going to see different types of traders say different things about structure and all that good stuff, but ultimately it's the same stuff, right? So don't get too hung up on all this stuff. All you're doing is you're looking at how the price compressed into an area or a range. It was absorbed. It was ultimately rejected in this case if it's a pivot. And that just creates an area where the liquidity and the participation is compressed, right? It just condenses in, creates a high pressure zone, and then one side backs off and the pressure expands. It just releases in the other direction in this case, right? So that's all structure is. It's just little concentrations of participation. So when you break through one of those, the theory is, you know, if somebody's buying higher highs and higher lows, in this case, right, let's just draw it out. I'm just going to erase this. You guys all saw that just obviously hit a small stop. That's okay. I just want to be able to draw. So if somebody's buying higher highs and higher lows, okay, the expectation here is that they put their stop losses right below those lows. Okay, so what that tells me is that if I'm a bear and I want to exploit that, I need the price to push down into one of these zones, right? I'm just going to extend this over here. And then I need to break through it, because what's going to happen is all these stop losses are going to trigger. Some of them are going to be bought up, but ultimately if I want the price to go down here, I got to trigger everyone's stop losses to get them to start that cascade, right? So all these long positions in theory would dissipate or shorts would enter. There should be a compounding effect the harder these go down through multiple stop losses, and that's where you get effectively a collapse, right? And that's where you get like falling knife scenarios, 3-line strikes, and all that good stuff. Now the alternative to this is a liquidity sweep, right? Because there are a bunch of sell orders right here, right below, right? Because these are all stop losses. Buyers, right, the bulls, they're going to want to get these shares, right? Because again, they can't get filled, all in one order because they got hundreds of thousands or millions of dollars. They can't all just get filled in one place and then have the price go up like we do, right? Smaller traders anyway. So what they need to do is they need to push the price down into these areas, and then they'll rate all these stop losses right below this structure here, right? This white line. And then they'll absorb all this. They'll buy all those shares, and then they'll buy more. They'll commit their full piece, and then that is a liquidity sweep, and the price runs up and punches a new high. Okay? And that is where we get crazy moves, right? So in order to get the price down, they have to do a bunch of manipulation. They have to do traps, inducements, and all that good stuff. We're not really going to get into all that today because ICT concepts is great and all that, but it's also kind of full of shit in a lot of aspects. So I don't want anyone to blindly subscribe to these things as the gospel, right? Just understand the concepts for what they are and what they represent, and don't expect them to always be present, because that's where people hurt themselves. Not every single stop loss is going to be a liquidity sweep, and not every break of structure is going to be a momentum breakout and all that good stuff. So we really just have to learn the kinds of things that are out there, and then learn kind of how we can apply them. So again, right here, I've got a zone that I can watch, right? So if I were to draw a tool, I wasn't actually paying attention to this one, so we're just going to use the absolute top here, and then a 1 to 3. And I'm literally just grabbing a random stock that ran earlier today just to demonstrate. Oops. There we go. So I kind of like to have wins and losses on these streams just to kind of ask you guys basically, like, is seeing this, right? Is seeing this failed stop here, this 5% loss, and then potentially seeing this in real time, is that causing you to feel something other than, if I go back to, let's say I go to, what was the other one today? It was PTIX, right? So now if I go all the way back here and I say, okay, let's use the same exact strategy right here, right? And then this one happens to win, is that going to cause you to feel different things? Because if that causes you to feel different things, that tells me a lot about you as a trader. It just still means that you have some psychology things that you need to collect data on and understand, right? ICT is a bad trader. I just think that the blind subscription to certain schools of thought is bad because it's not always accurate and people put too much faith in them. And a lot of it is also just overly complex for no reason, and it's misrepresented, if that makes sense. Like a lot of the concepts aren't really how things work in the market, so that leaves gaps. But it's enough to get people started and to get them to thinking about kind of how price moves, which is great. But it's just not. It's not like an absolute truth, because what it does is it causes a lot of people to try to predict, and that's not our job. We should not be trying to predict price movement. That is only going to hurt you. It's only going to create an expectation and perpetuate a lot of suffering that's unnecessary. My job, my measure of success is how well I can manage risk. So if I say to myself, okay, all my losses are going to be the same size or smaller, despite how big my profits can be, that's a measure of success. If I can make sure that all my losses over the next 100 trades are the same size or less, I'm good. Because then in theory, the profits, if they're disproportionately larger, they should take care of themselves without me needing some sort of crazy win rate or prediction rate, right? So I have to view myself as someone who manages risk and decides when I'm exposed to risk rather than if I'm going to be right? Because that's a mighty big if, and it's a mighty expensive if. All my losses are 100% or less. Can I introduce you to margin, sir? You take some loans out. So the overall point here isn't that we just want to say, okay, well, this person said this is going to work, 60% of the time, so I'm going to go apply it, and then I'm going to get a 60% result, right? Because that doesn't work. It doesn't. Backtesting and win rates and all that stuff, it is a false metric. It doesn't actually mean anything for the future, right? It only shows you like a rough probability, right? And that's not ever a guarantee. It's not ever going to make you a profitable trader. It's just going to say, okay, well, with this specific set of parameters, historically you got this rate of return. Therefore, it should be roughly the same going forward, but it also depends on what you apply it to. I can apply one strategy on SPY, right, on the 1 minute time frame and get a 60% win rate, and then I can go to the 3 minute and get a 20% win rate. It is not a valuable metric, and that's what you see a lot of the times when people publish backtesting stuff. Is it's always cherry-picked time frames, cherry-picked tickers, and there's usually some outliers that kind of weigh it pretty heavily in one direction or the other. You don't get how people just trade trends with volume indicator and that's it. That's not too hard. Give me a ticker. Watch, I'll show you. I love doing this. We're going to turn this into a backtest stream. Looks like GES moved up a little bit. SLP is garbage. All right, so here we go. So we're getting some volume here, right? So if I give you one criteria, okay, I say, okay, first thing I want to look for is a small red candle. And every time I see a small red candle and the price breaks over it, I'm going to take an entry. And then I'm going to use the opening price of that red candle as an entry. And then I'm going to use the lower of the two participating candles in that color change as a stop loss. And then I'm going to set a minimum take profit or minimum ratio of 1 to 3 or higher, right? And at that point, I'm going to lock 75% or more of my shares, okay? And I'm only doing this on things that are moving up that have volume. I don't need any indicators. I can see that this volume is greater than this volume, right? That doesn't require a whole bunch. And once I lock in the 75%, which in theory should be a nice close range if you're using a small risk range, small red candle, right? Then I should be okay letting the remainder of the shares run. And it didn't require anything complicated. But my brain as a human, I'm going to complicate the hell out of this. I'm going to make it a lot more complex than it needs to be because I feel like I need to do more in order to make it successful and to prove it to myself that it has to be complicated, because that's what you're told. You're told that you have to do a lot of, complicated analysis. You're told that it's difficult. You're told that it's very, there's a lot of moving parts and you need all these indicators. And so you don't. At the end of the day, you don't. It's about psychology. It's not anything to do with what you see in shapes and colors, right? Okay, S&P. All right, give me a day. Just a random day. I'm going to go on the 1 minute time frame. You pick the day. Hopefully it's within the last 2 months. So I don't have to scroll forever. I also have some mac and cheese here. I'm going to nibble on for a little bit while you're doing that. Today? You want SPY or SPX? The actual exchange or the index? Or the ETF, sorry. And is the 1 minute time frame okay? Or do you want a different time frame? See, I'm letting you pick. If you go into another Discord and you ask them to do this, you're going to get banned. That's great. What's the difference between the S&P? That's a great question. So the S&P SPY, SPY, the ticker, that's an ETF, right? That's a collection of stocks that are within the S&P index, the Standard & Poor 500. And this is it's basically a fund that just represents like a basket of stocks. So overall, if they do well, the stock will go up, the ETF, sorry. If they do poorly, it's the top 500 basically. Then the ETF will decrease in value. So when there's massive sell-offs and like tech stuff, S&P tends to go with it, right? Because they're weighted. Now the SPX, that is the exchange itself. So for this, there's no shares, right? This is just it's a cash-settled European-style contract-only situation. So you can only trade options on SPX because there's no underlying shares. They don't represent a company or a collection of stocks. It's just the exchange itself. So this is a sum of all the listed stocks, basically. It's a little more complicated, but that's kind of how it works, right? So this is SPY's bigger, older, angrier brother that just got out of prison and wants to touch stuff, you know? So SPX will absolutely destroy you if you're brand new because your risk management will not allow you to sell stuff when it's down 60% in 2 seconds. And you're probably going to struggle to sell it when it's 700% up in 30 seconds, right? So you got to be very careful with SPX. So forget I told you that ticker. SPY, on the other hand, is still dangerous as well. So you got to be very careful with this one. It can move just as fast, especially with the 0-day contracts, but it's great for difficult analysis because it's not very consistent because it's got a lot of algos on it that exploit a lot of stuff, which makes it great for us, right? Let's take a look here. Oh, God. Duco. I used all the mortgage money on my SPY calls today. My question is, how should I approach the wife about now having to move out of the house? Are you moving out of the house or is she moving out of the house? Or are you both moving out of the house? Because I feel like it's probably not that last one. All of us. The dog too. Well, risk management includes learning how to physically defend yourself. Bank's taking it back. Well, you can fill out an application to the bank, see if they're hiring. You still got to kiss your collateral goodbye. All right, so we got SPY, right? We're going to do the ETF here, and we've got a strategy we can use, right? Well, you pick a strategy. Pick a number from 1 to 5. Or do you just want to use color changes? And we're going to go from the very first candle in the market, which is this big white candle, and we're going to go to the very last candle. That one, which is this red one, right? Let me just check on GES and SLP here. What? Look at that. That's crazy. Let's swing by SLP. Garbage. All right. So we've got this combination of shapes and colors on our screen, right? You know, there are any number of sizes and proportions between the wicks and the candle bodies and the distance between the open and close, you know, the relation of candle to candle, and we just need to boil this down into something that makes sense, right? Because that's all this is. It's just shapes and colors. I hate when people make it overly complicated, and I hate when people say that it's not just shapes and colors, right? Because that's all it is at the end of the day, if you really think about it. It's literally just blocks and lines, okay? But our brain assigns a meaning to it because it represents, you know, changes in money and value and things like that. Okay, you want to try to spot liquidity sweeps, break a structure, and fair value gap. Ooh, okay. Well, I'll tell you right now, it's going to be very difficult on SPY, but we can still do it. So what would you like to start with first? Because the break a structure is super easy, right? All you got to do is plot your pivots. So there's a pivot. There's a pivot. Oh, we got to break a structure. Let's say the price is going to go down, right? Oh no. You see? That's super easy. You're just picking a range where the price is turned around, and you're looking for a break of that range. All right, that part's super easy. That's it's just looking for the specific shape and color. In this case, would just be this. Right? You've got that. You got that. You got that. You got that. And then you got that. That's a pivot right there. Because none of these candles on the left and none of the candles on the right challenge this high. Okay? So that says, again, price pushed into this range, compressed really tightly, and then rejected. There's a change of power there, right? So that part's pretty easy, pretty straightforward. How do people do it as a strategy? I'm not sure exactly. Like, what would you need to add to this? I guess there's all, like, it doesn't even have to be the pivots, right? You want to see something silly? Watch this. So you've got your first candle of the day. You got the first like 5 minutes, right? You got the high and the low of the first 5 minutes. All I got to do is look for a break and a retest of that, and just trade the rejection of the outside, right? Any strong move off that range, up or down, right? If you treat this like treat it like a trampoline. Oops. I actually have to, I guess I got to draw the line, right? So if I were to move this over here, extend to the right, and I kind of wish you could make these, oh, you can, sweet. Oh no, it doesn't obscure the candles, dang it. Dang, dang, dang. All right. Basically what we want to do is treat this like a black box, right? Anything that goes into this is only ever going to result in a function of one of two outcomes. Price is either going to go up out of it or down out of it. Okay, so pretend in your mind that none of these candles exist. Everything in this range is invisible. Okay, it's a mystery box. There's a fog of war. All right, so all I'm interested in that case, is stuff that comes out of the bottom or stuff that comes out of the top, right? So if I'm looking for breaks of structure, and you know, whatever levels you decide to use as a pivot, all I got to do is trade the direction that it goes. In theory, that, you know, this represents compression and release of price, this represents compression and release of price, and one of those failed. So they failed to defend it. The other side came in and conquered them, and it should continue in that direction in theory, right? Now, my job isn't to predict. It's not to make sure that that's going to happen every single time. My job is to simply try it and manage my risk. So if I'm looking for things to go down, all I need to do is find a low risk opportunity when things are currently going down, and then I need to set a tight stop loss because I want the price to keep going down. And that's when again, my job is to manage risk and decide when I'm in stuff and when I'm not in stuff based on that risk, right? So if I want stuff to go down, I'm going to look for candles that are going down. Okay, and I can always set a stop loss right above the same candle that I enter on anytime. It does not matter. Your risk never needs to be greater than 1% or one candle, right? That's always kind of my staple rule is I don't need crazy risk. And then again, in determining whether or not I stay in the stock or whatever I'm in, I need to make sure that it keeps going in that direction, right? So if my goal is to buy something or sell it in this case, because we're shorting, to run it to the downside and it's up here, I've broken my plan already. It no longer fits my analysis. I shouldn't be in it at that point. Does that make sense? This is a deviation from my plan. I can identify it and I can take action because the chart is telling me the price is no longer going down. In fact, it's going higher than it was when I got in, and higher than when that initial move started, right? So in this case, it's okay, right? I'm just taking a small loss. It's very small because again, it's one candle or less at all times. Okay. And then we get another opportunity. So the price actually breaks out right here, okay, which tells me I can use that as a stop loss and just let it do its thing. I don't have to force it. I don't have to do anything crazy. We get 1, 2, 3, 4, 5 candles here with a lower high, so I could take some profits there, right? And then just let the rest go. And I don't have to think too much. I mean, in this case, the price went pretty far. You know, we can move the stops down and all that good stuff all we want. You know, there's plenty of potential on that one, and then it eventually came back, right? So if we're not taking profits, we're kind of shortchanging ourselves. You need at least 1% gain per trade to cover fees. Okay. Well, you're probably not going to get that on SPY equity because 1% is like It's a lot. It's $5.40 something cents right now, or $5.36 right now. So if you got in at 536 right now, for example, it'd have to go above 541 for you to get that 1%. So you'd have to trade the option stuff, or more responsibly, just don't trade SPY. Right? So if we look at something like ENTO using the same approach, right? Just anytime there's volatility, we can just use very simple, very rational things to make our decisions for us, right? We can pick any freaking range. It doesn't matter. I hate when people say that this is the only way, blah, blah, blah. Pick any range. Pick any level, really. And eventually what's going to happen is you're going to get a series of these, right? Sometimes you're going to get, you can trade the breakout, you can trade the retest, whatever, right? And I'm making it a point to not look over to the right now because I wanted some time to go by. If this is my entry, this is my stop loss right here, and this is my entry right here, just for whatever, let's say I'm just buying the breakout itself, which, realistically the entry would be like right there, but let's say we didn't, let's say we waited for the candle to close. If this is my entry and this is my stop loss, my take profit would be up here. This one just happened to stop out because, again, the chart is telling me, hey, you got in when the price was going up in the direction you wanted to, out of a range where it wanted to break up or down from, right, with some violence, and it just happens to go lower. So in this case, it's no longer going the direction I wanted it to, so I need to stop out, right? The chart is telling me that. And then what that's going to do is it's going to lead to the next opportunity here, and that is probably going to have a lower stop loss, right? So eventually you're just going to walk your stop loss down into the zone, and then you're just going to stop getting breakout candles. So it's kind of a self-protecting mechanism, right? So in this case, again, you would have stopped out right here, and that's okay. Right, so this one would have stopped out, then you would have had an entry here maybe. Let's say we grab the open of this candle and then a stop loss here. Let's say that that one stopped out, right? So 1, 2, 3 stop outs, and then we get another one right here. Let's see, that one would have stopped out as well. I'm just erasing the lines as I go. This line here in the middle is the breakout lane, the breakout line, sorry. Then I get this guy. And that's all you need. You just need one winner in most cases, and you're fine. And that's all we needed, right? And if we missed this one, we could always just come back and grab this guy, right? Price pushed down, and then it broke out, okay? And the strategy itself does not matter. I hate when people say that there's a best strategy or try to imply that there's a best strategy. They really don't matter. It's plug and play. And that's mostly because people misuse them. Ultimately, a strategy's job is just to teach you, or to help you assess what kind of risk you have. It's not about the profit range. It's not about the success rate and blah, blah, blah. It's not. It's just about how small and insignificant you can make all your losses and how consistently you're able to do that and identify setups. So it's a mindset thing. You just have to change your mindset. It's not a loss if you don't sell. It is if it goes dark. If they do if they delist and then they force liquidate you. Have fun with the IRS, sir. And again, if we do the color changes, right? For example, if we're using the small red candle and then some sort of disproportionate take profit, okay? I choose the size of this risk range. I can always put a filter in there and say, okay, I don't want this to ever be more than 5% or more than 3% or more than 1%. And if I don't see a setup that fits that risk range, I don't take it. Okay? So in this case, let's see if we would have got that one. I'm just going to move this over. The entry price would just be above this guy. So in this case, just one simple strategy with a 1 to 3 risk reward. Okay, that would have been it. So in that case, you would have gotten a win. And that's kind of the key point here, is that people are always going to get different results because they're always going to use different strategies. They're always going to trade them on different stocks and on different time frames. There's going to be different volume on different days. So the one strategy we tried had 3 losses, 1 win, right? This one had 1 entry, happened to win. That's great. But then if I do it somewhere else on a different stock, that could also provide 3 losses, maybe 1 win, right? So don't get too hung up on technical analysis. That's like 5% of trading. It's just shapes and colors. It should be very simple. But that's where people put 95% of their effort. And, another question we need to ask ourselves is, what's good enough, right? Because what happens is a situation like this, right? let's say this is your entry using that same exact strategy. Okay, this is your entry, and price went up here to 1137, and then it came back down, and then you watched your green position turn red because you didn't take your profits, right? How often, or how much time, should I say, how much time did this stock spend in profitable territory, and how many times did you tell yourself this wasn't good enough? Right? It's not a perfect trade. You didn't catch the absolute top. It's not 26% profit, right? Well, neither's negative 14%. You know what I mean? So if this is your approach and you're just buying when the price starts to move up and you're selling when the price stops moving up, but you're not actually selling, instead you're holding it down here and also not selling because you're afraid to realize a loss at that point, you're going to have a hard time. And that's, again, it's 90% psychology, but for a lot of people, it's 95% analysis and 0% psychology. So the other 5% is just pushing buttons. So in terms of, becoming a successful trader, you can look at things like structure, and you can look at things like, trend breaks and change of character and fair value gaps and all that other fun stuff. And it's great. It's good to use, but those are just for identifying areas of potential. Ultimately, it's for you to decide whether or not you take the risk and how much risk you're willing to accept. And when you enter the trade, accept that it's a black box. Okay, you have to understand and internalize it as something you don't control. Once you've committed your money, that's it. Sometimes it'll work out, sometimes it won't. But you choose the amount of pain and discomfort that you endure once it comes out of that box. Does that make sense? I can't physically cover this area on the screen because you guys won't see it on the screen share. But if I could put a piece of tape over that, for example, and I see the price come into this fair value gap, and I don't see the price come out the top, I shouldn't be in this trade if that's my strategy. But there's fair value gap traders that just buy every gap they see because they think it's the one, and they commit everything they have because they think it's going to change their life. But they don't account for this. And it did change their life. Now you got to work harder at work. You got to take a weekend. You got to commit a little more time, a little bit more effort, another small piece of your life is gone because you couldn't control your impulses. It's not because the stock happened to go down. It didn't go up in the first place. So you shouldn't have been in it at that point. And then also seeing this as an end result could have just as easily resulted in something like this. Right? We're only seeing one of two potential outcomes here. And this is the one that happens to be the chart will always be right. It's not about us being right. It's about the chart being right and us obeying it, basically. So again, small red candle, big profits, right? Big profit potential, I should say. So very easy strategy. It doesn't really matter which strategy you use. Here's a value gap. Look, fair value gap, right? Let's trade it. Is the price going to come back? Who knows? If it does come back and then it goes to the upside, we have another opportunity. If we decide it's healthy, we can risk it. If not, we don't have to touch it. Price could also just come slamming back down through this one just like the other one did. We have no idea what's going to happen until we see it happen, right? So price action is technically a lagging indicator, if you think about it. You don't know where the price is going to be in the future. You only know where it's been. So you have to treat it like that. And you have to say, okay, well, this doesn't really make things happen. It just helps me identify where things could happen, right? I know you guys hate when I lecture at you, but days like this, it's important because there's so much blood in the market. If you guys look at this, SPY being down almost 5%, Dow's down 3.5%, Nasdaq's down 6%. Foreign markets are down as well. It's time to focus on those losses because that's what takes people out of the market. It's not the profits. The profits work themselves out. But if you're not focusing on your losses and then you're beating yourself up when you see stuff like this, the lifers already know what potentially could happen here. Right? You guys know this is a setup. It's just a matter of watching and waiting for it to happen. Because we know where the liquidity is, we know where the participation is, we know where the fear is, and we know more specifically how the algos are going to exploit that. Is Matster in here? Actually, now that I'm thinking about it, he's not. All right, time to move it up. Right, so all these people that are buying right here, great. I hope they're taking their profits. This is a lot of volume, but I'd say we got maybe one more candle. Maybe. Maybe, maybe not. But this candle's volume is going to have to exceed 90K, and I don't think that's going to happen because there's enough profit here on the table for them to slam the price down. So we'll see what actually happens. That's my thesis, but I can't guarantee that's going to happen until it happens. So instead, if I'm a short, all I need to do is identify a thesis like that, say, okay, well, I have this objective justification for it. Here's my area of potential. I need the price to push down, and then I need to identify some sort of acceptable risk for allowing that move to the downside, and then I need a place to take profits. And if I can lock the bulk of my profits somewhere nearby at a reasonable, achievable rate that I can get consistently and easily, then I have an opportunity here for a net positive trade that I can guarantee myself. Does that make sense? That's my job. It's not to say, oh, it's going to go up or, oh, it's going to go down. It's what do I do when it does? And what don't I do, more importantly? Because that's where people hurt themselves. So I know exactly what I'm seeing here, and I know how I would exploit it. Which tells me the guys on Wall Street and their computers also know how they're going to exploit it. And it's probably going to happen here pretty soon. So, if I'm trading to the downside, I can put an order in right here to short, and I can put my risk right here as long as it's acceptable. Let me just change this to red, and I'll change this one to yellow just so we can identify that it's an entry threshold for a short. Obviously, we're not actually shorting this because it would be hard to borrow, and there's all kinds of complications with that, especially during extended hours. And then I know that down here I've got some sort of profit area that I can take. Right? So if the price isn't in this box, I shouldn't be in the trade. Right? It might seem simple, but it's one of the things that messes people up the most is they anticipate. They try to get in early because they want that good deal. You got to be patient. You just got to wait for things to develop. And ideally, we see increasing volume here to the downside, but we didn't. We saw decreasing volume, so it's just people backing off a little bit. I'm going to eat some more mac and cheese while we wait for this. Delicious. Does this all make sense so far? Oh, DKNG? Let's take. Ooh, nope, that's ugly. Oh yeah, in the daytime, absolutely. Snowflake, can you do me a favor? Can you send this to Matster? Just that chart. I just want him to look at it. He'll know why. All right, so price is actually pushed up this time. So what I got to do now is I got to move the stop loss up and then I ask myself, is this risk range acceptable? Or is it too big? Now I know that I've got ascending lows here, blah, 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 blah. It's 5 candle rule, right? If I get another higher low on this candle, for example, then I can move this level up. And then that readjusts the risk range, but it's not in place yet. So I still have this as a risk range. Oh yeah, I can see why. I bet he does. He trades the heck out of that, I'm sure. It's a beautiful chart for what he likes. All right, so we got 8 seconds left on this candle. So time is also a support and resistance. So I know when to, focus on this, and I could say, okay, I'm going to move this up now. It's got about 2 seconds left on it. That candle's closed, and now I have another opportunity with a small risk range. And this, again, this is my job. I need to just identify these areas of high potential, low risk, and then wait till the chart tells me it's time to get in with a healthy amount, and then also get out when the chart tells me it's time to get out. So as a concept, this is my career. It's not trying to predict, right? Because that's where people, again, they mess themselves up so bad. And when you try to predict, you assign yourself the blame when you're not right. And you won't be right all the time. So right here, we'd be looking to get in. And this is the higher of the 2 participating candles. And then we can look for a massive, I don't want to say massive, but we can look for a reasonable strike, right? And we could say, okay, this is, 4.5%. So maybe I do, 12.5% for my take profit, right? Here's my immediate take profit, guarantee myself a net profit. As soon as that's hit, And at this point, the trade is out of my hands, right? I don't need to do anything until one of these two lines is hit, the red one or the green one. If the red one gets hit, total exit. If the green one gets hit, I sell the majority of the shares, or buy them back, I should say, because we're short selling here. And then I let the rest run to the downside if it wants to. If it doesn't, that's okay. Once it hits this green line, I guarantee myself a net positive end result. And if it hits this red one, I guarantee myself a minimal loss that's insignificant. I don't have to worry about this all night. This isn't going to destroy me. Now it's a waiting game, and this is where we start to sit with ourselves and we think and we say, okay, what am I experiencing right now? Why am I feeling these things? Why am I, tempted to push a button? Why am I constantly adjusting the chart and zooming in and out? Like, why am I doing all these things that my brain is just kind of doing on its own, right? I move the chart for you guys specifically because just for clarification here, I move this because sometimes the chart, the visual won't update. It'll like pixelate, so I don't want that to interfere with the analysis. So I just kind of move the chart back and forth every now and then. But it's not because I'm fiending or anything like that. But new traders will do that. They'll just kind of shuffle the chart around. They'll change time frames and add indicators and all that good stuff. So we don't want to do that to ourselves. So we're watching paint dry. It's in the proverbial box, right? We know that the price is going to go into this box, which it did. And we know that the price is eventually going to come out of this box one side or the other. But it's in the box now, so we don't have anything to do. We just let it play out. Okay? That's all I care about. Can I sit on my hands long enough to let this trade play out? And what am I feeling and experiencing in the meantime while I watch it? Right? That's where you should spend most of your time focused, not trying to push buttons and add things to the mess and making things sloppy, Now, if this comes down right near the target and then pushes up and results in a loss, that's a whole different set of emotions because we've created an expectation that it was going to hit this profit, right? And then when it doesn't, that expectation isn't met. That's cognitive dissonance. We hurt ourselves that way. And that happens quite a bit. That's all right. It's all part of the game. Ultimately, when we got in, the initial outcome was one of two things. We were either going to take a small loss, which is insignificant and fine, or we were going to take a profit and potentially let the remainder run. Now, all of a sudden, since it came down and now it's pushing back up, we get a different take on that initial loss that we were okay with, right? We start to blame ourselves. We say, oh, I should have moved my take profit. I should have, like done all these things. I should have scaled out, and that's where we hurt ourselves, So we gotta break that cycle, but you can't really break it till you identify it. Does that make sense? So in this case, right, the justification for this trade dictated that we had an ideal setup and a reason for the price to go down. Now the fact that it pushed back up shows it's not ready, and that's okay. You're gonna shake box while waiting, yeah. So that tells me that there's either too much of something, right? It's either too much money on the line, too much risk range. We can reuse this level, by the way, or there's a need to be right. Like there's that ego aspect, and it doesn't mean you're a narcissist or any of that stuff. It's part of our brain, right? We want to be compensated. We want to be right. It's what led us to survive as a species. So it makes sense that it's part of our trading. So there's too much of something in the mix, right? Do you feel the same way when you're paper trading or back testing versus when it's a real trade? Or is it different? I'm going to eat some mac and cheese while you answer that. That's scrumptious. I was going to check on SLP. Yeah, this is Morse code. You can't trade that. It's garbage. Kind of like that, though. So in this case, using that same strategy, that would be the trade with a 1 to 3. But we're not actually going to trade this because it's garbage. So but the setup is there. All right. So currently we have 1, 2, 3, 4, 5. 5 candles currently forming, right? So I'm just going to leave these lines the way they are, but we're going to erase these lower 2. We're again going to be looking for a downside trade. But that setup isn't going to be valid until this candle closes with a higher low. So let me just move this into place. Oops, if it doesn't jump around on me too much. I'll just put this up here. Okay. Paper trade is easy because there's no consequence. Oh, I like that word, consequence. If I'm wrong, like I did put options, paper trade made 2K. I do the same in my real account, so I want to see $20 to $30. Okay. Yeah, Snowflake, he said the word, man. He said consequence. Gotta hit him with it. So yeah, that's the whole point. Like Snowflake, I gave him a hard time about making his bed the other day. Same exact concept. It's a consequence, right? Snowflake said that not making his bed, for example, is inconsequential. It doesn't affect his day. And I said that's exactly the mindset we go for when we're trading. It was part of a much bigger discussion about expression of the self and blah, blah, blah. Like there's a whole bunch of other components to it. It was in the lifetime section, so it's a little more advanced, but it all boils down to circumstance versus consequence. So circumstance is where the price goes. We don't control that at all, ever. I don't care what anyone says. Retail is a drop in the bucket. We're a non-factor. Our job isn't to try to move the price. Right? That is a circumstance. Environmental factors, if half your house collapses while you're trading, that's a circumstance. You had no way to control that. If you have a heart attack while you're trading, that's a circumstance. It's not something that you're doing, and it's not something you control. It's just life happens sometimes, and it's okay. It's all part of the game. That what we do control, and the only thing we can control, is our risk. That is a consequence, right? So every time we take a risk, we attach a consequence to it. Now, if we transition our blame or the burden that we're assuming from circumstance over to consequence, like saying, I'm in this trade, it's going to go down, and I didn't respect my stop loss, right? What you've done there is you've taken a circumstance and you've denied your consequence, and it has taken over, and then you're in a losing trade, and then you're chalking it up to circumstance. You're saying, oh, this is always my luck. When in reality, you had a predefined stop loss. You just didn't follow it for whatever reason, and that's okay. It's all part of you. It's part of being a human. But rather than accepting that and focusing on that, you're resistant to it, right? You're resisting your own humanity at that point, just to be right, and that's not healthy in terms of trading or how you approach yourself. So again, I'm not going to elaborate too much on all that stuff because it was a bigger conversation. But that's the idea, though, is you have to study yourself, and you have to know yourself, and you have to really kind of be okay having conversations with yourself. And it all boils down to circumstance and consequence. So if you're unable to accept circumstance, you'll be unable to accept consequence, if that makes sense. Trading regular stocks, my stop will get hit on a pullback and then shoot up afterward. That's okay. That's all part of the game. Is there anything stopping you from getting back in? If your goal is to buy it when it's going up and to stay in it as it goes up and get out when it stops going up, you hit your stop loss, that's okay. It starts going back up, you can always get back in. But more importantly, you got out when it wasn't going in your direction. So you managed your risk. And if that happens and you just don't get back in, that's okay too, right? If you only have one trade per day, some days it's going to be a small loss, some days it's going to be a larger win, and that's okay. It all balances out at the end. It's just a frequency thing. So all I'm doing here is I'm just following the lows of the candles up, by the way. You feel like you're going to be wrong again. The word again, right? Because that what you're doing there is you're carrying the contamination of the previous trade into the current trade, which is okay. Again, that's part of being a human. It's very difficult for us to separate the two because we're hardwired to recognize patterns and to rely on them. Right? We want to know what the little fur ball that we're staring at with 2 legs and a beak is, right? Little triangle on its face. I can identify that as a bird. but only if it flaps wings or it has some other recognizable feature. But it's part of my brain. Like if I see something orange and black and it's got stripes, I'm gonna want to know how big it is, right? If I see a butt that's orange and black and has stripes and a tail sticking out from behind a bush, I know not to go in that bush because it's probably a tiger or a stuffed animal, right? Could go either way. So my brain does that for me. It keeps me out of a lot of problems. I don't know how many bush tigers you have around you, but they're out there. They'll get you. We got to manage our risk. But in the market, the brain does the same thing. It likes to analyze patterns. It likes to seek familiarity because that's what keeps us alive and it keeps us healthy and all that good stuff. But it works against us in this case because it's lying to us, right? It's saying, oh, this trade outcome will be the same as the last trade outcome. I know it because of blah, 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 right? Because it extrapolates. When in reality, your brain doesn't know the future. And you know that. Like, when you hear that, you say, yes, that's crazy. There's no way I can tell the future. But the inner working of your brain doesn't accept that part. It's like, no, I'm pretty confident I know what's going to happen. It's going to happen, right? And that's when impulse control matters, right? Because if you can't control the impulse, you're going to operate on that belief. You're going to, okay, my brain knows what it's doing. It knows the future. I'm going to push buttons and it's going to happen. You're not part of the control at that point. Exactly, Snowflake. You just nailed it. Once you accept that there are going to be losses, all you have to do is limit them. That's it. For timing, you literally just wait until the stock's going in the direction you want it to go. And then for risk, if it's not going in that same direction, you could just get out. It's okay. Super small losses. Doesn't matter. Oh, crap. I meant to move that up. So this is our opportunity, right? Just again, I'm just illustrating, right? Little 1 to 3 take profit. Small, easy to achieve, very consistent. We can lock 75% of our shares right there. Just be done. And then we can do something crazy like seek way down here for for the big boy target, right? That's it. But as soon as we hit this green line, we lock in the bulk of our shares. We guarantee ourselves a net profit. And then from there, it'll go up, down, or sideways. Doesn't matter. Is that a huge profit? It's 3.34%. No, not at all. But is the risk that we took to get it of 1.12% huge either? Absolutely not. Do I have positions that are 20, 30, 40, 60% down using this approach? No. Do I maybe have positions that are 20, 30, 60% up? Yeah, sometimes I do. So why would I endure all that drawdown unnecessarily? Because I think I know what the future is going to hold rather than just saying, okay, it's not my job to predict. It's not my job to try to be right all the time. I understand and accept that losses happen. It's my job to make them small. I can become very, very good at my job without making things complicated and just using shapes and colors. But I have to convince myself that I'm able to do that. And then I have to actually do it and not let myself down. Racer Fan says, very informative. I understand to an extent on the full thought process you have and what you taught on what I asked. I'm also a person who has to practice those traits and processes to fully see and grasp the final 10% of what you referenced. So it just takes practice. Yeah, absolutely, man. Just be here. That's all. It does take time. And what I'm describing right now is just shifting your mindset from I have to secure this number of dollars in profits and I have to be, it has to be a perfect trade. You have to transition from perfect to complete, right? Just get it done. It doesn't matter if it's perfect. It doesn't matter if it's ideal. Just show up, do what you can in the moment, and do it to the best of your ability. And when I say it and what you're supposed to be doing, that is risk management. Don't try to predict. You're not going to do it. It's not going to work. It's a skewed perspective. So if you want to do this professionally and do it long term, you have to stop trying to be a guesser, is what I'm getting at. Yeah, think about it like taking a test, right? If you got a time test, you've only got 20 minutes, maybe there's 50 problems, right? You're already kind of doomed at that point. But what you can do is you can go through very fast and just immediately know. Do I know the answer to this? Do I know the answer to this? Do I know the answer to this? Just move on. To the ones you don't, just skip them. Right? That's all you do in the market. If you know the answer, it's a point you can get in your favor. You answer it right then and there, you move on. If it's not, you skip over it. Maybe it's small, maybe you take a point loss, whatever, it doesn't matter. Now, if all your correct answers are worth 3 points, and all the answers you don't know are worth 1 point, you're probably going to be okay. It's better than if you took negative 90 points on one question that you didn't know the answer to, because you got too hemmed up on that one problem, and you just couldn't move on, couldn't move to the next one. Or maybe the next the next problem you did tackle, and you only got it half right. So you got 90 point loss on one question. Jeez, I'm mixing up my my analogies here. 90 point loss on one question, and then half a point profit on the other one. You're going to have mixed results. It's not going to go well. So in terms of this, right, you either know it or you don't, and you have to be honest with yourself. You're either in a trade that's moving in the direction, or it's not moving in the direction you want it to. So you're either in or you're out. You know the answer at all times. You can always tell. And you've got very clear boundaries, right? And you'll be fine in most cases. As long as the risks make sense and they're manageable, digestible, comfortable even, you should, in theory, feel just as good about a losing trade as you do a profitable trade, because your focus should be on execution of the trade. It shouldn't be on the end result. Like if I owned a restaurant and somebody dropped a hamburger patty on the floor and I lost my mind and I stopped taking orders and I just threw more and more hamburger at the floor trying to make that one piece of meat come back up and get on the counter. That is not the way to run a business. You know, you have to just accept it for what it is. Chalk it up to the cost of doing business. It's one small piece of potential profit, and you can move on and just keep doing more and more and more and sell more burgers, sell more hot dogs. But for a very specific reason, we always get hung up on trying to get that piece of hamburger off the floor and back on the counter, because we want to be right. We want to make sure that that burger gets made. And that's the pitfall that 90% of traders fall into and they can't climb out of. Exactly, White Goodman. It's tough to maintain that consistently and not degen. And that's where I ask you to look at the data. Because yes, the YOLO plays and stuff, they all do look very attractive. We all love seeing big green profits and we want to see them in our portfolio, and we get stressed out when we don't, right? Because we see data, but we don't see it in our yard, right? And that's a specific type of stress. But look at the data. How often do your trades go 3% up, 5% up, 1.5% up, and then turn red? Is a 1 to 3 to 5% trade achievable more consistently? And how often are your trades going down 20, 15, 30% before you lock them in finally? Just look at the data. So a little cheater's trick that I like, I set these up. I have a little hotkey right here, for example. In this case, it's a sell order, right? And that's all I got to do. I just set up a trailing stop loss of a given percent for any trade that I want, or a fixed take profit. Let's say I just want to place a market order with a 3% take profit. I can do that. Most of the time, I'm going to be okay. Maybe 1%, right? And if that's all I want to do, 3% compounds insanely well over 220 trading days in a year. Now, you're going to have losses, obviously, but they should be smaller and insignificant. But we're so hung up on trying to be right and trying to make it worth our while that we're sacrificing so much potential just because of our ego. And doesn't make you a narcissist or anything like that. It's not a toxic trait. It's just part of who we are as humans and as a species. We kind of have to use that stuff. Most of the time I just want to make $20 off 100 shares, but the range in one candle could be 10 to 20 cents in both directions. That's okay, right? So you know that that's a pretty consistent range. So what can you do within that range, and as well as within your expectations, to make that a more mechanical process? Yeah, exactly, Snowflake. Yeah, turn it into, if I'm right, I make 20. If I'm wrong, I lose 10. Yeah, one 10% day kills people faster than 10 1% days. Absolutely. So it's a mindset thing. Like I keep saying, I know I'm kind of repeating myself here, but it takes that kind of saturation and hearing it 500 times for that, maybe 501st time, for it to click and be like, oh, I literally don't have to suffer this much. Like, it is a choice. It's just a very difficult choice to make early on. Like this trade right here, it's still active, right? We've got our initial entry here with a 1.12% risk. We've locked 75% in theory, or more than half, at a very convenient 3.34% that we can achieve a lot of times. You know, and then we came up here. We've got a validated stop here, right? Validated high that we can move our stop loss towards to further reduce that risk range on the remaining 25% shares. And then we've got, you know, some target down here somewhere, right? We don't know what this is going to do. It could just blast up from here and it's okay. We take a small loss on what's left. We've already locked in the bulk of it. This is a guaranteed net profit so far. And in order for it to unguarantee that profit, the price would have to go up here and me not do my part when the chart tells me it's time to do my part, and not cut that risk exposure. So again, my job is just to determine if I'm in and how much I'm in when it's time to be in. And if it's not time to be in, I need to make sure it's my job to get myself out. It's not to make the price go up or down or think I know what I'm doing and you know, it's going to go up, because that's not sustainable. Fast Subi, I don't know. I see I'm down in panic sell, fearing it goes down more, even when the MACD is open and trend line is positive. Okay, so in that case, right, it's circumstance versus consequence, right? When you see the MACD open and you see the trend line positive and you see all these other factors that kind of confirm your thesis, that's okay. That justifies taking an entry as long as the risk is minimal and it makes sense. That's perfect. That's exactly what you should be doing. The problem is when it's time to stop out, do you hesitate? Do you feel things? When you're in the trade, if it's a little bit up, do you feel compelled to take those profits early? Do you compromise on things, or do you let it play out consistently and feel exactly the same, whether it's a profit or a loss? Yeah, there you go. Thanks, Snowflake. Appreciate you guys helping each other. There's Matster. Everything. You just missed it all. Sometimes you're the deer and you just freeze. That's because of your brain. And that's okay. It's a very common identifiable response to certain stimulus. And that's, again, it's just, you have to view yourself as an organism. Right? You're like a little computer function. You put certain variables in, you're going to get a certain result. So in this case, if there's a lot of money on the line or a lot of ego on the line, and you're in a trade and maybe things are moving a little fast, that's a lot of stress. Your brain is going to prioritize certain circuits, and it's going to start pumping out certain hormones. And then when that stimulus that you get going into your eyeball doesn't match what's already sitting in your brain that it's trying to compare it to, that gap there between the two, that's cognitive dissonance, and that's going to activate your amygdala and stuff like that, your HPA axis specifically, your brain will release cortisol, it's stress, blah, blah, blah. There's a whole process. But either way, the end result of that is decreased impulse control, and that means impulsive, hasty decisions, which result in losses or hesitation in your case, right? Because paralysis is also a very real part of the fight or flight response, or stress resolution. So yeah, that's where you have to practice. You have to condition your brain to say, okay, I'm no longer trying to survive in the wild with predators, and I don't need to make sure that my food is preserved, and I have access to fresh running water and that my offspring is secure and things like that. I'm looking at shapes and colors on a screen that's just an electrified shiny rock that I have in my home, which is fortified against the elements and animals and stuff. Like, you're much more secure now, but your brain doesn't recognize that, or specifically the parts that process this kind of stuff. You know, because to it, all stress is the same. All fear is the same and all stress is the same. It's just varying quantities and configurations, right? So you have to kind of reprogram your brain. So practice, and you got to have rules, right? What you do is you set yourself up a set of rules, checklist, and then you try to follow it as consistently as you can, and you identify where you deviate, and you identify why you deviate, and then you track those. You document the hell out of it. You study it. You experience it. Feel it. Write it down, and then what happens is you'll notice patterns. Let's say you collect 10 trades in a row, right? You notice, oh, I keep cutting my profits early. That's a pattern, right? You can identify that and look into yourself and say, oh, why am I doing this? What's causing me to do this? What kind of thoughts am I having? And then you can eventually put a step in place that'll kind of help you not do that. And then, you know, once that part's resolved, you'll notice another pattern and another pattern and another pattern. Oh, I didn't trim my profits this week because I was doing really well and I wanted more, right? That's common. It's normal. It's perfectly fine to be a human. But we got to break that cycle. Here's another 5 pulse, 5 candle fella right there. So that would be a secondary take profit right here. So we'd have another 75% of what's left sold right now as I ramble. So we sold the initial 75% here, guaranteed a net profit. We have 25% remaining. We sell another majority of that 25% that remains. Maybe now we've got 10% or 5%. Not a huge portion of it. And that can get sold down here. And if we get another validated lower high, then we can move this guy down. And then if the price breaks the trend, right, break a structure, break a trend, then we can cut our risk because of what it represents, right? It represents that the price is compressed into a range, and then they failed to defend it, and the price went up past the range. So that was the last turnaround point. That's where we should capitulate risk at that point if we want the price to continue in the direction we traded. Man, I'm rambly. That's great. Oh, one thing I got to do, I got to set up this. Sorry, I forgot. I got a little bit of housekeeping stuff I got to do. Sorry, guys. I'm just going to let this play out as I'm doing this stuff. If you guys have any questions, feel free to ask in the chat. I just got to fill out a form real quick. All right, that's going on there, there, and there. All right. Does this stuff make sense so far? Okay. There's that. All right, Wailing Bull. I love it. Duco, that's going to mess with me. Dude. Snowflake. I was singing your praises and Matsters. What's up, Wowzers? Wowzers, I thought you were on the trial, buddy. Was that last week? Am I losing my mind? I mean, it's okay, unless it's like super personal, like a rash or something. It's all good, but that's up to you. I mean, we could look at rashes, I don't care. What's up? Is it blistering? Give me 1 second, guys. I'll be right back. guys, sorry about that. I'm back. Wowzers. Can you tell us one of the biggest L's you took when you first started as a trader? How did you process it? How did you move forward? Also, one mistake you refused to make, regardless of it being a W or an L. Yeah, so when I started, the owner of the restaurant I worked in was like there a lot, and I was there a lot. And he's like, "Hey, you got a good work ethic." And then, you know, he got me into the market, and I immediately lost 80% of my money. so I was pretty bitter about that. But, you know, I went and confronted him a little bit, not in a hostile way or anything, but I was like, "Hey, man, that wasn't cool." And then, you know, he kind of did it on purpose to make sure that I would slow down, right, and show me, like, what doesn't work. Now, obviously, I don't want that for you guys, which is why I tell you don't copy trade and don't do all that other garbage. But, you know, it was an eye opener for sure. And then we kind of sat down and we're like, okay, well, let's focus on what didn't work. And then that's, you know, kind of what I did with you guys. So. One mistake I refuse to make. That's a tough one. Make all kinds of mistakes. I guess if I had to choose, maybe just blaming myself for being a human. Because you don't want to mess yourself up over that. Robot man. Well, you're allowed to be, you know, imperfect. A lot of the philosophers have rambled about that quite a bit. We're supposed to be inefficient, right? All species are. That's how you get evolution. You have to have little quirks. Oh, you're lactose intolerant, and I'm here eating mac and cheese like a jerk. Well, I'm taking the hit for you. All right, so for this, we get another validated lower high, so we're going to move that down, right? So here we go. So now in this case, right, we started with this, and we were at what, like a 3.3%? So far, we're down to about 11, almost 12%. And we've moved our stop down, so that way it's a guaranteed net profit on the remaining 25 shares, all following the same stupid strategy we pointed out earlier. So no guessing, it's all just mechanical. Give me like 2 more minutes, guys. I'll be right back. Sorry about that, guys. Yeah, no, I had to mute for a little bit. You didn't hear no bell. I think the bell was like an hour and a half ago, buddy. I could be wrong. Who's to say? I'm actually amazed that the recording software, StreamYard, hasn't like muted my mic a bunch, because sometimes it does that like midstream. hey, we're not saying it's because you smell or anything. I like that people are going to be watching the recording of this later. And I'm just talking to people that smell. They can't see the Discord. Alright, so what we're doing here, right, we're seeing the price kind of fizzle out. It's going a little bit sideways. And what that's going to do is it's going to give me these isolated highs, and they're going to be lower until I get a higher one, at which point I just stop out of the trade. Give me one more moment, guys. I'll be right back. Okay, sorry about that. Just a very active environment here for some reason. So. Yeah, Matster does that. He just holds a grudge sometimes. I don't know what his deal is. We're doing final walkthrough Saturday on the new house, and then we're probably gonna close on Monday afternoon. So that'd be nice, yeah. Get another property. It'd be pretty fun. You've admired Matster for years? I have too. That guy gets it. He's got the right mindset. Alright, so we got about 6 seconds left on this candle, then we can move our stop loss down from this guy to this guy. Or theoretical stop loss, right? Because I'm not actually live trading this. I want to show proof of concept. Okay. So like I was saying, yeah, if the price goes sideways like this, that ultimately tells me the same thing. The price is no longer aggressively going the direction I want it to. Therefore, my risk window is closing, right? So a couple things are going to happen. I'm either going to get a break over this high, or I'm going to get a lower high, slightly lower, right? If the price doesn't drastically move, it doesn't displace, at which point I'll just continue to move this down until eventually one of these candles just pops over that guy, right? And then the chart will again have told me what to do, but for right now it's just telling me move my stop loss down. I've already secured majority profit here, the other majority here, and we're just waiting for the, you know, the lower low here, at which point we can always exit completely, or you know, maybe set a trailing stop in that case, or whatever other approach we like, right? But as soon as we got to this 3.34%, we had a net profitable trade. So I could have just been done for the day right then and there with a 3% ROI, right? And if it went up, right, I could also been done with a 1.12% negative ROI for the day. And it's okay. You know, again, there's 220 trading days in a year. So even if we full ported every day, that's 220 instances of, you know, negative 1% plus 3%. So it doesn't have to be super crazy. This one looks a little active here. It's all just sub garbage. Let me just look at GES here, by the way. So yeah, this immediately died. Like, there's just no volume on this. That's amazing. SLP, look at that. Just absolute garbage. There's a $1.48 spread. That's almost a 10% spread. It's like 7 or 8%. That is insanity. All right, so it looks like we might hit this pretty soon. We'll see. We'll zoom in super close so it looks epic. Boom, we hit the target, right? And at this point, again, we can choose to be out, or we can understand that we've got another 5 candle run right here, and then we can just move the stop loss aggressively below each candle that forms. Or above, sorry, because we're going to the downside here. So we can lock it all here and walk away, just like we could have locked it all here and walked away. or we could even locked it here and walked away. But right now, I've got an opportunity to just let the chart do what it wants to do with an aggressive stop loss on a technical impulse that's going in the direction that I want it to. All I have to do is wait for that impulse to break, and then I'm out. Yeah, I hate GitLab too. Does all this stuff make sense, like mindset-wise? I don't want anybody to walk away from this and focus on the strategy. It's all about your mindset. I'm telling you. You have a much better time in the market if you just accept things, right? And it might seem a little counterproductive because you don't want to be like giving yourself a get-out-of-jail-free card from quote-unquote bad trading, which is why we practice, right? Just use a paper account. You don't have to use real money. This is just shapes and colors. And then just accepting what is and understanding that you don't control the price. You only control your risk. Will you be in or will you be out when any given number of things happen? And by how much? So when we took this trade, we had a series, we had the setup, right? The justification for it. We saw a confirmation with a super small risk, so we took it as theoretical entry. And since then, we've had 1, 2, 3, 4. 1, 2, 3, 4, and then the fifth is the stop loss. 5 take profit mechanisms at which we can exit the risk. So in terms of risk, 4 out of the 5 methods that we've decided to implement here would have been profitable, and only one of them would have been a loss as far as exiting the position, right? So I like this approach. I have a much better time when I don't have to be right all the time, and when I am right, I just have to let it do its thing and listen to the chart, and it tells me what to do. It bosses me around. It beats me up and takes my money, or we could work together, and it could be my supervisor, and I can just listen and do the job and make money. Because it always knows what's going to happen. It's always right. I'm not. I ain't about to do all that. Do you guys like examples like this? I'm also going to put I'll just put the trial link here in the Discord. Obviously, you guys are already in there, most of you guys, but I'll also put it in the chat on YouTube, Twitch, and X, just so everyone can see it if you care. And that is a 5-day free trial. We're going to open it up Monday. And that'll give you access to everything in the premium side of Discord, other than, I guess, like the full education. And you can watch the coaching streams, but you can't get in the chat. And that's only so that it's not disrupted by like a huge influx of people, So that's all. But you'll be able to listen to the stream and all that good stuff. So I'll just put that there. There's no pressure, no commitment. And then, I'm here all the time. So on both sides. I teach the lifetime members. So if you guys are on the lifetime side, like we got Matster here, we got Snowflake, you guys get it. You guys are you're in the loop. You're in this in the circle, right? Stickman, Chag, you guys are here. Dude, you're gonna get there one day. I know you got some obstacles outside the market, so no pressure there, but we're gonna get you there. Don't you worry. One way or another. And then of course, Mr. Duco. Mr. Duco. Thank you, Wowzers. It's such a hidden gem. Well, I'm glad you're able to take advantage of it. We got another 5 seconds. I'm trying to jump the gun early here. I'll move that down anyway. You guys can see we didn't do any complicated analysis here. We just literally just shapes and colors. Is this greater than or less than this? Is this greater than blah, blah, blah? Does that happen 5 times in a row? And then what do we do when it changes? And is that risk too big or too small? Right? Super easy, super straightforward. You did put it, did you put it in there now? Let me take a look. You did put a question in lifetime, and Pookie and all the staff does a great job of answering those questions. Well, I'm glad you think so. We're here to help. Not without a scholarship or a lottery ticket. We'll get you there, dude. Don't you worry, man. All right, Chag, I appreciate it. You take care of yourself. Can answer whatever. Well, if it's oh, okay. I don't think I'm overthinking it. Okay. Sorry, I'm just reading the question real quick. Okay, so basically you had a trade where you're seeing the data, the end result is kind of conflicting with your original plan, and you're considering swapping out a piece of it to more dynamically assess the risk range. And more specifically, you're focused on not overthinking it too much. So in this case, you know, you kind of mentioned, like you answered your own question. You know, do I think you should gather the data first and then consider modifying it? Absolutely, because that's the process, right? And the data will tell you what to do more effectively than I can, right? Because you know what you're trading, you know what you're going to apply it to. I know what I apply it to, but it doesn't work the same for both of us, right? The only real consideration there is that, you know, we have a filter of max risk, and if it doesn't fit within that, we can always skip it. And we can also consider having volatility-oriented risk, such as the ATR, like you mentioned. But that will also scale out the profit range, so we have to consider that as well. So therefore, we could use something I'll teach you guys later on. It's dynamic positions, and that's essentially where, yes, you can have a greater risk range, but we typically want to, oh, there we go, we'd be all out right there. Boom, done. We typically also want to have a, you know, a fixed, a shorter profit range on the bulk of our shares and stuff. So we'll get into all that on the lifetime side. I don't want to go too deep in the paint here. Exactly, Snowflake. Or sorry, Stickman. You know, and we all do. That's all part of the process. You know, but understanding that we effectively drown ourselves in shallow water for a very long time before it finally clicks, and we're like, wait, what am I doing to myself? You know, the fact that you're aware of that process is good, and that makes it a lot faster and a lot easier to actually have that click moment. But for right now, it's going to feel like you're just throwing everything you have at one problem, and you're just running into a wall over and over and over again. It's all part of it. The goal is to not blow yourself up in the meantime and not throw every dollar you have at that wall while you figure it out. Yeah, we talked about the charts on them. I don't really care about either of these companies. They're both garbage. It's just GES and SLP. This is not tradable. This is SLP, and then GES just kind of had one opportunity there, and then the volume quickly fell apart, so we would have just gotten out of it at break even. So just garbage. There's nothing there. And we instead looked at this for a short, just because it had that nice, beautiful pattern that we love, that we like and love. You know, so this trade, right? If we just if we just look at this, that's a 22.21% drawdown. So in that case, we would have made a hefty profit on that one, assuming it was an actual, you know, trade that we entered and we were able to get good fills and all that good stuff. Sorry. But, you know, it's a theoretical trade for proof of concept, just a real-time demonstration. You know, and we had a clean mechanical process. So those of you guys that were either in lifetime or if you guys remember the color change stuff, it's that basically. And then we just use the 5 candle runs and lower validated highs for our stops and take profits. Very, very simple, very straightforward for what we've already rambled about for several months now. So yeah, and today I just really wanted to hone in on that psychology and the mindset stuff, because that's where people hurt themselves. It's not the shapes and colors. Lee's getting mad. Oh, I like Mr. SLP. I just don't like his stock. Okay, Skizzy swings. Remember when I was complaining why I was negative, even though I gained a lot of percentage in DMs? This is why. Crazy fee. Yeah. So exactly. So you're going to have currency conversions. You're going to have fees. You're going to have, especially like if you do options and stuff too, you got additional fees. Or if you do like ADRs or certain ETFs and mutual funds have fees as well. So it's going to be a little bit of nuance there, but that's all got to be factored into your take profit and stuff. And then if you have commissions per trade, or per transaction, I should say, you got to factor it in twice, because right, you got to pay a commission to buy, a commission to sell. So maybe you don't want to scale out across 6 cells. Maybe you have to do a single trade. You know, stuff like that really, really matters. And then you can also get into the territory where you're doing dividend stuff to offset those transactions, right? So if you've collected amount in dividend payment over the course of a month and that covers X amount of transactions, you have a limit for what you can do without paying extra for transactions. Because they're kind of covered, you know? Cheesed off. Isn't it, bruv? Oh man, you guys are degens. All right, let me end the recording because this trade is over and the market is slowing down significantly and there's just not enough juice for them to be entertained, and I don't want to consume too much of their time after work. I'll hang out with you guys here in the Discord for a little bit, but let me end that recording. Thank you guys all for watching the recording after work at 2 a.m. and we'll see you in the Discord